Let's talk about no tax on overtime. I've been wanting to do a series of videos just on the different components of the new tax law. I wanted to start with this one because it's gotten a lot of attention in the media. So, what is it and what does it mean for you? Well, no tax on overtime is not exactly what it sounds like. It isn't the case that overtime compensation is now completely tax free. No. Rather, what this bill has done is it's created a new deduction for overtime compensation. And so there are a few rules around who gets this deduction and who qualifies for it. So let's kind of go over what the parameters are, right? So the first thing that you should understand is that it isn't unlimited. This deduction is $12,500 max for a person who's single or $25,000 max for a couple that's married filing joint. If you're married and you choose to file single, well, then you're not eligible for the deduction. Additionally, there are some income limits that you want to be aware of. So to get the maximum $12,500 for a single person, then your adjusted gross income, has to be $150,000 or less. To get the full $25,000 for a married filing joint couple, then your combined income has to be $300,000 or less. And then for every $1,000 that you make above that $150,000 and $300,000 threshold, your deduction is phased out by $100 until it eventually reaches zero. And so you definitely want to be aware of the income requirement there. And then it's really important to note that essentially the deduction only relates to the additional compensation piece for the overtime. And so what does that mean? Well, usually overtime is paid at time and a half, right? So usually to figure out what your hourly rate is for overtime pay, you take your regular rate and you multiply it by 1.5. So only the zero point 0.5 portion of the overtime compensation is eligible for this deduction, right? So it wouldn't be the full amount. It would just be the additional compensation piece, that additional 0.5, whatever your rate is. It's just that additional 0.5 piece that's eligible for the deduction. So super important to be aware of that. And then what does this mean for you as an employer and as a daycare owner? Well, certainly, if you have folks in your employ who are working more than 40 hours a week, they may very well qualify for this deduction. And so what are your requirements and what is your kind of responsibility or duty, right? As the person who is, essentially employing them? Well, you want to make sure that you are fairly classifying their pay as overtime when it is when it's incurred, right? So if someone's working over 40 hours a week, you want to make sure that you are correctly tracking that time and that you were reporting that time properly on their W-2. There's going to be some changes this year as it relates to how employers are, required to remit W-2s. You're very likely already working with a payroll company. Your payroll company can help you with that. But from the employer side, you want to make sure that at a bare minimum, you are tracking overtime hours. And so that at the end of the year, you know exactly who's been paid what and how much of that compensation and how many of those hours fall into the overtime bucket. Because your employees can only take advantage of this new deduction if their W-2s adequately and properly reflect overtime pay. And so really important to know that as an employer, you don't just get to say, hey, well, I employ Sally and I paid her $500 this year and that amount was overtime. No, it actually has to be reported on her W-2 to that effect. So I hope that makes sense and I hope you're paying attention to that part. It needs to be adequately and correctly reported on your employee's W-2. The other thing you want to be aware of is because the reporting requirements fall on you as the employer, there's going to be an increased amount of scrutiny to make sure that folks aren't trying to game the system, right? It could be the case that maybe you employ friends or family members. Maybe they come to you and say, hey, why don't you go ahead and drop my hourly rate down to, I don't know, $7 an hour. And then say that you're paying me for $40 a week at $7 an hour. And then I want the rest of my salary paid out or the rest of my earnings paid out in the overtime bucket. So that essentially at the end of the year, what you're paying them, year over year is the same. They're just able to push a larger amount of their compensation into the overtime bucket. If someone comes to you and asks you to do something funny like that, you should tell them no, because in the event of an audit, if you were, found to have done something nefarious like that, you're going to be the person on the hook, with the IRS. And that could very well be considered tax fraud. And, tax fraud, what that involves, what happens when you engage in that, it's really outside the scope of this video, but the consequences are never immaterial. And so the onus is going to be on you as the employer to make sure that everything is being reported fairly and accurately. So do not try to game the system. And I really discourage you from helping people to game the system as well. And then the last thing that I want to mention is this provision is set to sunset or expire on December 31st of 2028. So like so many components of this new tax law, this is not permanent. This is only going to be around until December 31st of 2028. Well, I hope this was helpful. If you have any questions about overtime, about no tax on overtime, rather, or about any other components of this new tax law, definitely drop them below. Let me know what you'd like to see discussed in the next video.